Hey, this is Danielle. Welcome to the Simpler Options free video for December 21st, 2018. So, as you may have gathered from the premium video for our Simpler Foundation and Simpler Options members, I am incredibly bearish this market. So I think that the market has shown, a significant breakdown, both technically and emotionally. And so I do remain swing short this market. I'm looking for lower targets in the S&Ps, in Amazon, in Apple, in Netflix, in Facebook. You have the FANGs weighing down the market in pretty much every sector. So keep in mind, this is something that's completely counter trend, but we have to understand that the market never goes straight up or straight down. And even within the context of this downtrend, we still get rallies for a couple days at a time. So we are now at the point where everybody wants to know, is Santa coming to visit? Is there going to be a Santa rally? So here at Simpler, we defined the Santa rally as the 5 trading days after Christmas. So thus far, it's been in the news a lot. Santa's not here, this and that. Okay, that's fine. But it's really not the time frame yet that we look for it. So the Santa rally typically starts the day or two after Christmas and generally goes for about 5 days. All right. Right now, right here, I do think that we are in a good spot for a potential Santa rally. Why? Because we have already made a 1272 and 1618 extension to the downside. Now keep in mind, this swing is obviously much more severe than the 2 prior swings that we've gotten. We are also in an oversold situation where we have a ready and an aim, and right after ready and aim, then generally comes fire. If you go back and you look at the previous spots that we got a ready, aim, fire buy, it was right here. It's right here. These were oversold ones, right? And right here. So the last 3 times we got a ready, aim, fire buy, we did not correct the trend. So, I'm not expecting that we're going to get some phenomenal run that's going to go 500 points and make the S&P, take back all of these losses in the S&Ps. That's not what I'm looking for. I'm looking for a counter trend rally back to the mean that would be similar in fashion to this, or this. Okay? So I can set up the symmetry for you once we start to bounce, if we start to bounce ever. But that's pretty much what I'm looking for here. So I already went over why I'm looking for it. We're extended, we're oversold, typically at a spot where we bounce. And the other reason is because of the put call. Okay, so we have the put call ratio that's at really the highest level on the year. It was at the highest level on the year earlier today. It did not close at that level. The highest level on the year was February 6th. If you go back and if you look at February 6th and what happened on February 6th, this is the candle that we got. Let's see. I can scroll in a little bit better there so you can see it a little bit better. This was on February 9th and this one was February 6th. So this was this came after a huge day of selling, more selling. Then all of a sudden the put call ratio gets incredibly lopsided. What does that mean? It means everybody's buying puts, everybody has puts, and at that point the market is too lopsided that it shifts and goes the other direction. If you want to read more about the put call ratio, make sure you check out Mastering the Trade, John's 3rd edition that just came out a few days ago, and you can read all about it with multiple examples in that book. But basically it's just a heads up of when the market is really done with the selling. So we have an oversold condition, we have extended markets, we have a high put call ratio. The formula is there, but what needs to happen now? Well, there needs to be some buying. So that's the key part of this equation. Right now, I'm not seeing any buying coming through whatsoever. The market went out almost on the dead lows today. And so what I'm looking for is I like to really use my lower time frame charts, like a 30-minute chart, 30-minute, 78-minute chart, and I like to start to see a shift coming through. You want to start to see a stair-stepping pattern higher that would indicate that finally the lows are in. As far as the candlestick pattern is concerned on the daily chart, you really want to see the next candle not take out these lows. So if we had a candle like yay high, like this, then that would be indicative of the fact that the lows are now in. So we don't know when it's going to happen, but that's what I'm looking for. And you know, the primary areas that I'm going to look are going to be in the fangs. Typically the fangs have led the market. Now the fangs are leading the market lower right now. So, you know, even across the board, if you look at these names, these are absolutely leading the market lower. And I'm looking for a shift in these names to tell me that the market may finally start to trade higher. Of course, right now, we're not getting that at all. I honestly am looking for probably another down day on Monday. I don't really foresee a bunch of people or funds coming in. A bunch of people or funds coming in on a half day on Monday to make any type of big purchases here to push the markets higher. So I'm personally looking for Monday as a down day, and then maybe after Christmas, we can see a rally. We have the formula, but we need buying. So look for your lower time frame charts. Look for that candlestick pattern that I told you about. And for those of you who are members, we'll see you in the trading room. And for those of you who are not members, come check us out at simplerfoundation.com or go to simplertrading.com/join to check out our options membership. All right. Well, that's all I have for you folks. I hope you all have a very happy holiday, and we'll see you next week.